아니 맥주 살고 비에 방어 오르막 완전 먹고 또 살이 살니까 오르게 이거 따스면 빨리 오늘 이제
Good. So, hello everyone. Good morning, good afternoon, good evening, good whatever from wherever you are today. It's so great to have everyone on the second edition of the Global Economic Outlook. And I know we all have expectations from today. So, our panelists, I expect you to be coming on right now. Dayball, where are you? We're here together before.
Good morning.
I know, right? Good morning from the other side. Yeah, and good afternoon from here. Philip. And then Baba Tunde.
Good morning.
Good morning. Good morning. Okay. So I promised everyone we'll start at 12 sharp and would make this for 90 minutes. Then we call it a good day. And we can all go on with our busy life or our quiet life, depending on the ones we live in right now. Okay. So Dave, I'm waiting for you guys to come on. Then we can start. Yes.
Do we have Philip here?
Yeah, I'm waiting to see.
I think it's on.
Okay, that's good.
Do you want us to join by video? Say something like the host has deactivated the video.
Yeah. Okay, sorry, 1 minute. Let me leave some music on for you guys as you settle down. literally coming up as the music gets to its peak. Yeah, that was my fault. Yeah. Okay. Babati, I think you should be able to activate your video now.
Yes, please.
Awesome. Okay. Just one more minute. Okay, good. So this is the second time we're having this. And I know the last edition was hot. It got very intense at the latter parts. And so I'm expecting today to literally feel almost the same, if not hotter, because there are new gists that we need to dive into. So once again, I welcome everyone to the second edition of the Global Economic Outlook being hosted by Ecofina. And today we have a fantastic panelist to work with, remembering clearly that these are just discussions. Most of the opinions, thoughts that will be shared by the awesome gentlemen we have on this gist today, they will be sharing their own perspective on each of the topics. Everyone still has the liberty and the freedom to share their own thoughts in the comment section. You still, as usual, be encouraged to go and do further research to form your own opinion on the topics we'll be discussing today. So before we jump into that, I'm going to allow our panelists to introduce themselves. I have Babatunde Okeniyi, is one of the, the founding fathers of the fintech world, like we know it in the last few decades. It's contributed immensely to some of the growth we've seen in improvement in payment gateway and integrations. So I have Babatunde Okeniyi on this conversation today. I have Philip Oguntoye. You all know him. You've seen a lot of Philip's articles, newsletters that he shares on a weekly basis, and is the main editor and the main contributor for the Ecofina financial newsletter you receive. And then again, we have Debo Alonge with us today. Okay, so just to run through quickly, I'm going to give each person 1-2 minutes, just say something about yourself to the audience so that we'll get to know you, and then we'll know how to attack you with our questions today. Okay, so starting with you, Babati. Babati, looking fresh and ready. So tell the audience a bit about you today.
Okay, good morning. My name is Babatunde Okeniyi. I prefer to be called Babati. Yes, I've been earlier background, engineering by background. I'm an engineer by profession, even though I don't practice that much these days, so I can't hold the screwdriver very well. So don't ask me any question. So engineer by background, an alumni of Lagos Business School as well as Harvard. I've worked in the banking sector for a very long time, EcoBank, UBA, Citibank, before moving to the payment industry about 12 years ago. I've been in the payment industry since then. My last position in the banking sector was CIO for 21 African countries. So moving to payment industry 12 years ago, worked with Unified Payment, and now run a fintech, Pay Attitude, as the MD CEO. I'm married with 3 kids. All of them are, you call them the Z age. So
Yeah,
I'm battling with those 3, and I get bombarded left, right, and center as early as this week. So I'm ready. I'm ready for the. What am I hoping to take out from here? I'm hoping that we could share ideas together with your audience. We could understand what is going on. We could begin to take positions on the various things that are happening around us, and then we'll take it on from there. That's my expectation today, and we can impart knowledge onto one another. So I'm here to learn too. It's never late to learn, so I'm here to learn too. Thank you very much.
Thank you, Babati. It's so good to have you in the conversation today. Debo, with a smile.
Hi, everyone. Yeah, good to be here again. My name is Debo Alonge. I describe myself as a finance professional. I work in the energy sector. I started off with in oil and gas, and now I work in power. So electrical generation, work with a lot of the utility companies around here. I'm excited about personal finance, how some of us can improve our livelihood through proper management of our finances, budgeting, and things like that. But since Babati also talked about family, I'm married with 2 kids. Of course, mine are younger. So, and I'm excited to be here. Same expectation for us to share our knowledge and learn from one another. We have experience from our first live broadcast that we had about 2 or 3 months ago. So hopefully we'll build on that, and we continue to improve, share more experience from each person here.
Good to have you again, Debo. It's good. Philip. Your mic is muted, Philip. Your mic is muted. Okay, good.
Okay. I said I'm going to be very brief, just a brief career, and mine is not as detailed as Babati or Debo, But I worked for Citibank for close to 8 years, and now I'm more into research and investment planning and all of that. So I'm also married with a kid. So let me just say that. So that's it about me.
Okay. So good. At least one thing is certain. You guys will be giving financial advice from a futuristic perspective for those who are unmarried. And then you also be giving some of your opinions. So it's good to hear that some of your thoughts, especially as it relates to personal finance, investments, surviving in recession, will be coming from a group of people with heavy financial burden. Because family comes with that. As much as family is a blessing, it also comes with huge financial responsibility. So hearing Debo talk about budgeting and all of that, that definitely sounds interesting to me. Okay, so let's jump right into this because we're going to keep to time today. And the hot one on the table that I want us to start with will be the Africa Continental Free Trade Area. I know that's an interesting one for Babati. And I'm expecting that more people across the continent should be showing curiosity to understand what this free trade area is all about, because literally our future as a continent depends on us getting this right. And so, Babati, what's the big deal with African Continental Free Trade Area? Why should anyone even really care to start with?
Thank you very much. As I said, I'm very excited to be here today, very happy to be here today. I would not use big English because that's what my kids will always say. They'll say, Daddy, break it down, calm down, break it down. So I like to break it down. I like to break it down. So they say African Continental Free Trade Area. So what is an area? It's a confinement of place. So when we say area, we're looking at Africa, the entire of Africa. So just cope your mind and say Africa is the area. So we are talking of the entire country, Africa. So that's why they say the African continent. So when they say free trade, imagine when you go to a market in Nigeria, any market, and you move from one shop to the other without anybody hindering you. You can go and bargain here. And then if you don't like the price, you move to another shop and you bargain. It's exactly what we are talking about here. So it will not be confined to only the market space. It will not be confined to only the states in Nigeria. It will be confined to the Africa. So you can move from the market freely, unhindered, from Nigeria to Ghana and go and price your market in Ghana. Buy your tomato in Ghana and bring it back to Nigeria. Nobody stops you. Same thing. Carry your potato from Nigeria or from Jos Plateau State and you move it into Zambia and you go and sell it in Zambia, collect your money and come back to Nigeria. That is what this African Continental Free Trade Area is all about. Very simple. ability to move goods and services, human beings, from one location to the other, sell it anywhere in those locations and come back home. No customs, no tariff, no harassment, no police checking anything, just moving from one stage to the other. In a very layman term point of view, all this grammar that all these 55 African countries are blowing, all these comma was is, and they bring the legal people, legal framework to put, that's what it is all about, to move your goods and services from one place to the other. So this all started sometimes in 2012 was when the agreement was signed, actually. And I think 44 countries out of the 55 have already signed. And as I said, it's just a continental market. You have a bigger market. You have a bigger movement of goods and services. You can look to a bigger market. And the truth of the matter is it was meant to create a single market for goods and services, facilitating movement by persons in order to deepen the economic integration of Africa. That's why it was set up. It was set up basically to liberalize the markets for goods and services, to contribute to the movement of capital between one state to the other, to lay the foundation for the establishment of Continental Customs Union at a larger scale. That's what this was meant to do, actually. It was really meant to promote and attain sustainability, inclusive, social economic improvement and development, gender equality, structural transformation of the states that are involved. When I mean the states that are involved, I'm talking about the African continent itself. Because the truth of the matter is, let me give you an example. So if you want to move goods and services, actually, from, let me take Kenya to Nigeria, for example. So if you're not going by, if you're not flying that goods, if you want to go shipping, that ship will first land in Europe first. Though. That's the honest truth. It will first land in Europe first. So there were specific objectives that the founding fathers wanted to achieve. As I said again, I'll recap them again. Wanted to eliminate they wanted to eliminate the tariffs and the non-tariff barriers to trade and goods and services in the union. They wanted to liberalize trade. They wanted to have cooperation in investment, intellectual property rights, and competition policies. They wanted us to cooperate on all trade areas. Customs issue, they want to have a uniform. Then they equally wanted to establish a settlement mechanism for where funds can be settled into the various goods and for the various goods and services that have been sold. Then they wanted to have a framework under which dispute management can be handled. However, there are challenges. So I will not say there are no challenges. So it's meant to kick off, or it has kicked off 1st of January 2021. It has kicked off. Please don't expect immediate transformation. It will take a while. It will take a while to dismantle the customs at the borders. It will take a while to dismantle all the police. But the important thing is that we have started. That is the most important thing. So there are challenges today, as I said. So poor road, let me start from Nigeria first on the poor roads and railway system. So if you farm in the far north, let me take Jos, for example, where they farm Irish potatoes. If you farm from Jos, before you get that goods to Lagos, I'm sure they will have all spoiled. So you can't begin to make use of the bigger market if you can't move those goods and services equally across the African zone. I gave an example earlier on. If you want to move this Irish potato to Kenya, for example, except you fly them, I don't see how you get them to Kenya in 2 days. If you want to go by shipping, yes, you can freeze it, you can have the right condition for shipping it. But there are no shipping lines that are roving the spheres of Africa. Most goods and services from Kenya will first go to Europe or Mediterranean or go to South Africa first, if it goes to South Africa, before it starts coming up down the stream. So transportation, railway links. Railway should have been the ideal thing, actually, very well. So for us to have this infrastructure in place across the African continent, it's a major challenge. We haven't even had it in Nigeria. We want to start talking about having it across Africa. So that's a major challenge from from where I stand. The second major challenge, again, that I see from where I sit down is the political unrest. So I'm not sure you want to move your goods and services. I'm not sure how many people will follow me to Borno State now to say they want to go and sell their goods and services because of the political unrest. Not just only that, in the Chad region, in the Sahel region, and I take Chad, Burkina Faso, Mali, Sudan, in those axes. I'm not sure anybody wants to go into those areas or move goods and services into those areas. I'm not sure anybody wants to go to those markets, no matter how much the money is. You can sell your goods and services, and then you have problems equally moving your money back to where you are coming from. So there are a lot of political unrest in Africa that is hindering the smooth takeoff of these big markets that we're all talking about. Again, payment infrastructure is a problem. The Francophone have done a lot in this, because if you go to the Francophone country, Burkina Faso, Mali, Senegal, Chad, Central African Republic, they have the CFA France that is easily acceptable among them. So they've done a fantastic work on that. Unfortunately, the Anglophone people, the Nigerians of this world, the Ghanas of this world, the Togo of it, well, Togo is split into two, the Gambias of this world, everybody is still maintaining their various currency in their various way. So there is no uniformity of payment. That again becomes something that is very critical that we need to bring together on the payment side. We need to be able to bring that together on that aspect of it. So I've spoken about infrastructure, I've spoken about political unrest, I've spoken about the poor roads, I've spoken about payment. One key thing again that I would speak about is the fact that the bureaucracy will not disappear overnight. Can you imagine going to semi-border and tell the custom that, okay, you cannot check my goods and services? The rule says you can't check my goods and services. You will speak big grammar at that place before you leave on that day. So the bureaucracy on the border sides will take a while to dismantle until the penalties begin to set in that are enshrined in the agreement. Before those things begin to break down, it will be difficult for you to go to the border and tell police not to search your boots. Or it will be difficult for you to tell, even when you bring personal effects into Nigeria today, customs will go and tell you, go and pay duty for personal effect. It is enshrined in the constitution today that you don't pay duties on any personal effect. So that's another problem on that again too. Another major problem that I see is the education. Because if we are not well educated on these items, then we will be suffering, let me put it that way. So if you don't know that because of the African Continental Free Trade Zone, you are not supposed to pay duties on some of these issues, you will get frustrated and you will be discouraged in moving this along the line. So very, very, very important that we are doing a lot of the education. And that's why for me, this platform again too is one of the critical things that I consider as one of the things that you are doing and doing very well in terms of the education. Unfortunately, not much people pay attention to some of these things that have been done here on this. Then, of course, there will be uneven distribution of wealth. Uneven distribution. So what do I mean? So you have people like Nigeria, for example, if they farm very well, and if they maximize the market size, we begin to see a lot of development, a lot of improvement. And the others will be wondering, but we just started this thing together with Nigeria now. Why is Nigeria moving ahead? It is because we are maximizing what we have. So you begin to see capital inflow more into Nigeria than other countries. So it is those that maximize this agreement that are going to move faster, in my own opinion. South Africa is leading in this aspect, in my own opinion, in maximizing what the free trade zone is all about. And they are quickly gaining ground. Ghana is another person that is moving pretty quickly on this side. It took a while for Nigeria to sign. I think we just signed barely last year or so before we signed this trade, after a lot of pressure, and we should have been the first person that should have signed that agreement, in my own personal opinion. So that's what I can say on African Free Trade Zone. I will leave the remaining time for question and answer so that I don't bore everybody. Thank you very much.
Okay.
Yeah. I mean, that was well
I
articulated.
want to jump on this one.
That was well articulated, Babati. I mean, comprehensive. Just to add a little bit in terms of perspective as well, let's look at it from as of last year, intra-Africa trade was only 17% of the total trade in Africa, compared to other regions like Asia, where they had like 60% of their trade being intra-Asia, and Europe was about 70%. What that tells you is that Africa, we are giving our wealth to other people. So Nigeria would rather export to Europe or import from Europe or Asia rather than trade with Africa. So we are giving our wealth out. And that is, with all Babati has said, is to actually bring that wealth back into Africa. Let's trade with ourselves. And some of the challenges that Babati highlighted as well, very correct. And I think there's a project in place as well to address the infrastructure. I'm aware of the Trans-African corridor, where they are creating highways to cut across Africa, north to south and east to west. That will go a long way in alleviating part of the infrastructure problem. However, like he said, I believe railway should have been the best alternative, because then you're able to ship more items at the same time rather than just one truck carrying a container. You can load like maybe 80 containers on a train, and you are moving a lot of goods at the same time. And since it's a corridor, you can drop off at different countries and you continue with your journey. So yes, they are doing some things, maybe not in the right direction, but maybe one step at a time. Let's look at it that way. I think another challenge that would come up, like he said, yes, it's going to bring about full advantage in terms of you taking your comparative advantage. What I mean, in the industry that you are the strongest in, you will profit from it. So there will be gainers and there will be losers in terms of industry. Then it then becomes a question of which one are we ready to give up? I will give an example of what happened with NAFTA, where at some point, manufacturing in the US shifted almost completely to Mexico. And then again to China, because they have comparative advantage in those areas. Their labor is cheap to manufacture, and we would expect to have something like that when we fully implement this Africa Free Trade Agreement. So I know it will not be favorable to some, say, for example, people that work in agriculture, and if Nigeria starts losing ground in agriculture, you see people will complain like the US did, and they are now trying to bring back manufacturing. So you will have something like that. But on the overall, I believe is a very good thing, especially because we look at it as a pie. The bigger the pie for Africa, the more cut each country will get from it. So that's just a little I could add to that. And thank you.
Okay, thanks, Debo. Just to take it up from there, I think you mentioned something very critical. Sometimes you feel like it's the big countries that will probably be at an advantage, but sometimes it might be the smaller countries who gain the most from this, like the North African Free Trade Agreement you referred to. I know President Trump tried to stop that in favor of the US, Canada, Mexico agreement so that they could renegotiate terms and all that. And I know also, like you mentioned, Biden is trying to bring back manufacturing to the United States, which is, it's expected, because if whatever sector is suffering, will definitely complain. And when you look at Europe as well, the UK is an example, because the European Union is also an example of what Africa is trying to do, maybe in a different format, but the European Union also, it was all about one market, everyone moving freely within the same, within the scope and space and all that. But the UK, they had the referendum and decided to pull out. It's been a painful one. Probably the gains are, maybe to take us some time to really know whether it's the best decision for them to actually exit at this time. But one thing is clear, that country will start to complain as they try to start to lose some capacity. So how do we, how every country leverages or how they take advantage of this will be critical. Keeping everybody happy, but yet taking advantage of the expanded market.
Okay, thank you so much for Philip for that contribution, and that's raises a point for me, which Babati rightly said. It's one step at a time. This is probably going to take us years to begin to reap significant benefits from, and the AFTA also depends strongly on the growth in our MSME sectors across the continent. We're not depending on the large corporations to drive this per se. For each country to maximize it, then you're talking about your SMEs being strong. And so I thought you could just, Babati, say something. How should an SME begin to think about the African Free Trade Agreement? How can the average guy who's either in a small size manufacturing firm doing food processing or what have you, how can they begin to design their business plans to get ready for the opportunities that can come from this? Because it's better you're prepared for it. So in the event that it opens up or changes happen, then you can get on board quickly. You don't need to be reactive. Can we get the SME sector to sort of begin to prepare for the opportunities this will pose? So what are your thoughts on what SMEs in Nigeria, West Africa, across the continent can begin to look at?
Thank you very much. So I met a gentleman who imports coffee from Kigali, Rwanda to Nigeria. That's an SME, and he's already in the space. And so I was shocked to see the volume of transaction he's doing. So yes, he's still battling with some of the challenges, especially on the customs people. They tell him, no way, coffee couldn't have come from Kigali. Coffee will come from Europe. So they are speculating that he's shipping something differently from what exactly it is. So what I would tell the SMEs is this is a bigger market. So let's narrow it down first and foremost to within Nigeria. So the SME, for example, is, and let me take it is manufacturing toothpaste. So how does it begin to get its toothpaste across from the plateau that is manufacturing it to Nasarawa, to Kogi? How does it begin to drop those things along the chain of the states if he's coming to Lagos? So for example, his load is trucks, how is he dropping it along the line? You need to begin to experience those things locally before you begin to understand that you need to blow wide. So I don't expect somebody that has not conquered Nigeria, and we do have 200 million population in Nigeria, to begin want to conquer, because he can maximize his profits conquering Nigeria alone. And then the experience he will build from that, he can begin to take it to, please don't go far away. As I said, logistic cost is a problem. Then you can begin to take it to Togo. Then you can begin to take it to Ghana before you begin to think of going to Kenya. Because again, you will meet competition in those places. That is one. Secondly, so I'm talking about understanding the logistics of the products or the manufacturing that you are doing, the distribution and the logistics. Then secondly, again, you need to be able to understand the longevity, how will I put it? Your products, you need to understand that it can only stay for 1 day or 2 days before it gets spoiled, so that you don't get to Lagos and everything is spoiled even before you cross over to Benin or Togo or Ghana. So you need to understand the life cycle of your products very well. Thirdly, again, too, you need to understand the countries that you are going to. So for example, if you are into pork meats, and you are developing pork meat, going into Sudan is a suicidal mission. Going into Muslim-denominated countries significantly will be a major challenge, because by their culture, those are not things that they take. So it's important, again, you understand the African country. So for example, an SME says he wants to start maximizing the African Free Trade Zone. And I'm asking him, where is Kenya? You say he's close to Egypt. It's close to, you need to understand the structure of Africa too. You need to understand the movement of goods and services within Africa. Because as I said, if you want to ship anything to Egypt, or you want to ship everything to Kenya, I always like taking Kenya and Uganda. You have to go to Europe first. So what would be the cost of transportation to those places and coming again to those places? It's a gradual process. So you need to understand the various aspects of it along the line. So the SMEs has to be thinking about, one, how do I conquer my immediate market? In the next 2 or 3 years, how do I move to sub-Saharan West Africa, then maybe to sub-Saharan Africa, then maybe to North Africa, maybe to Southern Africa? It has to be in phases. It's not something that you bring all together. Then you have to understand clearly very well that there is the market for it. You have to study and understand that there is a market for it. So you don't do the way we do, we say, we'll go and rough it when we get there. No, you can't go and rough it when you get there. They will ruffle you when you get there. So you can't go there and be roughing it up. So all our Nigerian mentality that don't do things in sequence and in planning, we'll have to bring it to bear, because it's not all those people that do things in like manner. So I was speaking to my friend, who became my friend. I mean, we had something similar to this. And he was saying that from where he manufactures the coffee, so he manufactures the coffee in Rwanda, means he has a farm in Rwanda, in Nigeria. So it must not necessarily be from Nigeria to another country. It can be from another country to Nigeria. So he said it takes him 2 days for him to get the goods from northern Rwanda to leave the Kigali. It takes him 2 days. But he said that product can take him 3 months to clear from the Nigerian side. You need to be able to understand those peculiarities as you go across the countries. Always start small, something you can always write off, just in case anything goes wrong. Imagine that goods will perish under 3 months, then we'll have lost all its capital. I think Debo will talk to us more about those capitals. So if you lost the capitals, I mean, I can only equate it that it will be blood pressure and it will be death straight away. If everything you have is what you bring into it. So those are the kind of things I will begin to know, to understand your product, understand the market, understand who needs it, who does not need it, and begin to move in leaps and bounds before you get out there. Thank you.
Thank you very much. Thank you for that. And I'm hoping somehow we just, like you rightly said, start small and then scale. So, and even that would apply to the trade agreement itself, where we'll decide where we start from, and just know that this is a probably lifelong journey for a lot of people anyways. So now to another interesting topic that I think we can jump into. And Philip, I'm going to throw that one at you and Debo. Semiconductor shortage. I know that that's a spicy one. Okay. Why? Why do we even have that? Why should we be discussing that at all? Why?
Okay. I think, well, I think that's one of the most important things, I think, right now. But maybe a lot of people still don't understand why. But maybe semiconductors are also called chips, and they are used in the production of almost everything we use, from computers to cars to phones to games. So everything we use, anything electronic, most of them, there's a high tendency or high probability that they use the chip or the semiconductor. So of course, everybody is involved in this one way or the other. An experience I had recently was that a friend ordered a computer, which normally should be delivered within a week, but it took more than a month to get delivered. And the reason given was that there's a shortage of chip or shortage of the semiconductor. So what it means essentially was last year, during the pandemic, a lot of things changed, including, a lot of people were working from home. So the things they were asking for, the demand, shifted also. People were asking more for personal computers, for games, for, other electronic equipment, which led to a surge in the demand for semiconductors. And that's not the only thing. Also because the 5G technology, of course, a lot of us have heard of it. Some are still living in denial as to whether it is going to come into. But for the 5G technology, they use more of the semiconductors as it comes. So of course, the demand, increased greatly last year. When you look at the figures, even for the personal computers, it surged far beyond the normal year-on-year increase. So because of that, the demand was too much, and they couldn't cope with those who produce it couldn't produce enough to meet up with the demand. Of course, when you know the way it is, it's just simple economics. When the demand is too high and supply cannot match up, there's something that would shift. One of it is that price has to move a little bit. Even if you don't have total control over, by the time somebody who needs it more than you do is ready to offer slightly more than you are able to, then, of course, everything changes. So, of course, those who produce, like Intel, like NVIDIA, like Qualcomm, some of, I think the Taiwan Semiconductor Manufacturing Company, they've not been able to meet up. I read, the interview, the TSM, that's the Taiwan Semiconductor president had, and he's saying that, no, it's not because the demand is too high, but it's because they are still gauging what the supply is. But I've now read that they invested about $28 billion to increase capacity. So if there's enough supply and you have enough capacity, why would you have to invest $28 billion to improve your capacity to produce these chips? So, of course, there is a shortage, severe shortage. Many of the auto industry, auto companies like Ford, like General Motors, they've had to, reduce their production this year. Some of the factories, in fact, had to be closed down because they didn't have enough semiconductors. And why the auto industry is suffering more is because last year they were expecting a reduced demand. So their expectation actually was that people were not going to, of course, people were not going anywhere. And they expected that the demand for cars was going to drop significantly. But it didn't happen as much as they expected. So now that they've seen that demand is still it is high, and they're trying to, they are not able to get enough from those who produce, because they also now have some new loyal customers, those who produce games and computers. And of course, you will have to stay with somebody who will stay with you during the period when everything is supposed to be tough. So those ones seem to have the upper hand now when it comes to the chips and the semiconductors. But of course, one thing that is important is that everybody is affected, whether you know it or not. If you have to ask, if you want to buy a new car or you have to buy a new computer, you will see what is really going on within that space, because everyone is actually involved in this. But I think Debo might have more on this.
Debo, do you have a position on this? Now, I'm more curious about what the opportunities are. So yes, there's a problem. In the midst of this problem, is there some benefit? Something for an investment?
Okay. Certainly, there are opportunities, of course. When you look at the companies, if you look at the entire value chain, and you look at those who are involved in the production of semiconductors, it's clear that if you position properly, you might, in the stocks, by buying some of the stocks of some of these companies, it might be a good way to actually benefits from that industry. Because I read recently that NVIDIA, the stock price has been moving on at a very high level, and I think it's the same with some of these other semiconductors. Of course, you expect demand to be high, and if demand is going to be high, then it opens up opportunities even for those who invest in that industry. They can't meet up with demand right now, no matter what they say. I think what they are trying to do is to discourage new entrants from the industry. Of course, you want to be the only one so that you can make all the money. But of course, those are the things. So I think if you target some of the stocks, it might be a good thing to do right now.
Okay. So Debo, as an
Yeah,
investor.
absolutely. I totally agree with Philip in that area. In fact, that was where I was going to come in terms of where we as individuals can benefit. Of course, I do not have the technology or the capital to set up a company to produce semiconductors, but we can invest in those companies given their current situation. With, as Philip mentioned, with the current situation, we're expecting prices to rise because, of course, demand is way higher than supply. And of course, also to add to why the auto industry seems to suffer more, as Philip has mentioned, the size of the entire auto industry only buys about $4 billion worth of semiconductors, whereas Apple alone, which is the largest consumer, buys $56 billion worth of semiconductors yearly. So the auto industry is a minor in this case. So they will not be the focus when the manufacturers are trying to ration who gets at any point in time. So we could expect that the auto industry will continue to suffer until the manufacturing is up to be able to meet the demand.
Okay, thank you so much. And thank you, Michael. Michael also just dropped a comment about that. So thank you for sharing that with us, Michael. So because I'm very mindful of time today, okay, I'm literally looking at the clock. So when you guys are speaking, I'm like, okay, how do I get them to just direct this conversation faster? And for our participants joining, please feel free to drop any questions you might have in the comment section. We'll pick it up. So while we wrap up this semiconductor global shortage, which obviously has some impact on individuals, companies, wherever category we place it, there is an impact on us, the consumers. Now, I want us to move to another interesting place, and that's the Fintech Zone, which Babati loves so much, but I have personal bias against. So I'm declaring my bias now that I don't know why Fintech is getting all the attraction it's getting, especially in Africa. So, for example, over $300 million already has come into Nigeria as a form of investment in the fintech industry. And, you know, like we're discussing the other day, I don't understand how, in the context of the continent free trade area, I see the future play, okay? But for a continent that is poor, I don't understand why we're putting so much effort into fintech. I get the narratives around financial inclusion, but a lot of it also stems on education. You know, people don't have developed human capacity. How exactly can we really have sensible turnover, production, exchange of value, money, and all of that? I won't dwell on that argument today, but I'm still curious because Abati, you're one of the you're one of the good people in that space. So I just want to know, there's so much increase in number of startups coming on from startups trying to address the problem related to fintech. Everyone is trying to solve it. Laudable, interesting solutions are out there, which is really making life easier for millennials, Gen Z too. But I want you to talk about this influx of funding. What is driving it really? What's the catch? What's in fintech that the average guy on the streets might not be paying attention to? Because there is some huge value there. So I want to speak to that.
Okay. Thank you very much. I'm still trying to catch my breath because of what you said. So first and foremost, I think, let me not make an assumption that we all understand what fintech is all about. It's a name. It's as simple as it seems. There's a lot of misconception around it. So in 2 sentences, I will just state what I think fintech is. Actually, this is an umbrella term referring to technologies, innovation methodologies, companies, new services reshaping the financial service landscape. Again, I will state it again. It's just a term referring to technologies, innovation methodologies, and companies and new services reshaping the financial services landscape. That's what it is all about. Now, let me go specifically to what you said, and I will take all the discussion from just what you have said. I mean, very simple. And I'll use examples to illustrate them. So I will not call names of banks so that I'm not sacked. Most of the banks own me, so I'll be very careful. So if you go into the traditional banks today and you want to open an account, what they will ask you is, let me make it a little bit complicated. You want to open a corporate account. So what they will ask you is, give me your form, your CAC registration, CAC form. Give me your form CAC that is showing the director's allocation. Give me the one that is showing the shares allocation. Go and get 2 referrals from people who know you. Give me all the ID card of all your directors. Give me their tax clearance. That process can take 2 weeks. So how will you feel as a young company exec? You walk into another bank and the person only asks you, what's your telephone number? Give me the RC number of your corporate company. All your directors, just give me their telephone number. And under 2 minutes, you walk away with a corporate account number. So Fumi, I will ask you, so how do you feel?
I know there's that part of me that's like, I know, right? I feel good because really documentation process can be time wasting, to be frank.
Correct. So you have fintech coming in and then using that telephone number, because there is a database that ties that telephone number to your NIN, that is fetching your passport, fetching all your details. You have the RC number that is tied to CAC, that is fetching all those information online real time. And then in 2 minutes, you are done. So what the fintechs are doing is they are bringing value. So let me equally relate that again to the discussion we have on the African Free Trade Zone that we had initially. So, and let me share my personal experience with you. So I wanted to go into exporting agricultural produce. So the first thing they told me is, Oga, go and register with Nigerian Export Free Trade Zone. So I went there, spent 2 days, finished registration. They say, no, you have to get NAFDAC certificate. 3 months, I did not get that certificate, and I'm still on it to get the certification on those ones. By the time I finished, the goods are spoiled in the port. So I tried again. After managing to get all those things, I got to the port congestion. Before I even entered the port, it took 3 weeks. Goods have all damaged again. So how will you feel if a fintech comes in, working with Nigerian Export Free Zone, and I'm not changing anything? I'm just saying you go onto their portal and you fill everything you are meant to fill in there. And then those who want to engage NAFDAC and have SLA and are engaging them, and then under 2 days you are getting response from them. Those who want to engage some, that single portal engages everybody, and in less than 3 days you have everything. Remember my friend who is bringing coffee in from Rwanda says in 2 days he can always predict from his farm till when that coffee gets out of Rwanda is 2 days. That is what fintech does for you. You are asking me, why is there so much money there? Capitalists, and I'll leave that to Debo to sort out later. Capitalists will always remain capitalists. They know where the money is coming from. They are not investing for purpose of corporate social responsibility. They are investing for returns. That's the honest truth. So all those money coming in, they are expecting returns in less than 2-3 years, and they will get the returns. That's what they are after. And you can look at the various verticals that you have. I can give you a lot of examples on the various verticals. I'm giving you an example on the side of the agricultural produce for those who want to do export. And that's for all manufacturing. Okay, so let's go to a typical one again too, transportation. So you want to transport yourself. Why can't, and fintech can change the aviation industry. So why can't, as a fintech, why can't I be saying, okay, I will buy 10,000 tickets. If you buy your ticket from me, if the airline does not leave within 1 hour, I will give you back 10% of the money. If they don't leave within 4 hours, I will return, I will fly you, I'll still return the entire money. And get fintech to drive those kind of things. Because what they will do is to go and sit down with the aviation owners and say, okay, I will bring you 100,000 passengers in 1 month, but these are my conditions. And you will get them to deposit money so that when they fail on their route or on their promises, you can get the money back and give it to the people that you promise. So we can have a lot of revolution, and that's what is happening now. And that's why there's so much passion about fintech, bringing money, people. So let me give another typical example. If you want to borrow money today, they will ask you your great-grandfather where he was buried. You'll have to get certification that he was actually buried, just because they want to know you. But guess what? That does not guarantee you will pay back. That does not guarantee you have the capacity to generate the revenue you want to generate. So what do? They ask you for a house. If I have a house, why would I go and borrow money? So you have a lot of fintech now that are doing what I call social nuisance engineering for the purpose of borrowing. So they just ask you, what's your Lintel ID, what's your tweet ID, and then they use some artificial intelligence and say, what's your spend volume, and then decide, okay, I will give you 100,000 naira. And if you don't pay that money, they just go to all those your social Lintel level and send it to all your friends that you are a debtor. And you know we don't like those kind of things in Nigeria. That company was valued when they asked people like us to come in, what's about $1 to a share. 3 years down the line, investors are coming now and are paying $25 under 3 years. So you now ask fintech, and that's why I said, look, that money is not for free. If you don't deliver those values within what you said you deliver. So most of them are actually looking for value. They are creating value. And because they are creating that value, the people that are pumping money in it are looking for institutions that will create value today, that they will put 1 naira. JVs are coming in, and under 5 years, they are out again because they will sell it. They are looking for the money. The market is here, and that's what ties into the African Free Trade Zone too. The market is in Africa. Most of those European markets are very, very well saturated, and the returns are not as much as what you will see in Africa. So, and Nigeria, with a population of 200 million, is the right place for them to be in. Like, you're saying it hasn't impacted in education. It will come. When somebody creates value in the educational sector, it will come. So I foresee a future whereby all these your private universities will disappear because people will be doing digital universities. So all those your brick and mortars will go. The issue is who can bring value, and then the communal aspect that the school brings into it can do it. So it has to be a mixture of two. It cannot just be digital, because we the parents are looking for where to chase the children away. So we don't want to keep them at home. We don't want, even those of you that are parents, you say, no, they should go back to school. They should go back to school. So we see it as a runaway avenue rather than as a value add. So whoever can integrate those two together, time to play, time to read, digitalize the reading, bring down the cost of school fees. Because I tell you, I saw a secondary school fees grid for the 10 top school, and they are nearly fainted. Because all the private university, there is none as expensive as those top 10. So again, it's value creation. Create the right value with the fintech, create it in the right verticals, and you get the right investment into those investment. That's what is happening. So don't begrudge them. Just pray that your own time will come when they will start investing money in your own aspect. Thank you very much.
Thank you so much, Baba T. Thank you. Debo, I felt like I wanted to chime in.
Yeah, what else do I say? Baba T is the expert here, but like you rightly said, I mean, investors know where the opportunities are. They know the early days is where you make your money. And of course, you rightly said it, the developed world is saturated when it comes to IT. So they are looking for where's the population, where's the opportunity for their investment to give them quick returns. And Nigeria is apparently one of them. A quick question I want to ask Babati actually is in terms of the growth we are seeing now, and I know, of course, fintech relies heavily on data, personal data. How ready are we in terms of data protection, cybersecurity, and things like that? If you can just help us add more in that area.
Okay, so what I will say, I mean, having been a developer myself and having been gathering data and then having trying to bat a fintech into the Nigerian economy, is to say that most of us ensure the highest level of security in terms of what we are dealing with. Because there are standards, and the regulator have done very well in terms of what they have put in place. So there are standards in those things that we follow. I can't guarantee that it is everybody that is following in it, but regulation will catch up sooner or later with those that are not keeping in line with the regulation. And let me equally state that those that are investing money into those companies, look out for those things. When they are not there, even though they see the opportunities, they hold it as something that they will deal with before they handle it. However, let me state that in this part of the world, we are misinterpreting the data protection stuff. We are misinterpreting it big time. So education, again, is another major thing here. Most of the financial institutions think they speak with one mouth, open banking, open banking, open banking. And then when it comes to, and it should be open banking as a service, is they should open up their customers for other people to leverage on that information. But no, they're just paying lipstick service to it. When it comes to the actual operation of the so-called data protection stuff, it's a different ballgame entirely. I speak as an operator. So, and I know the fight and the struggle I've had to go to with the financial institution to get to where I am today. But again, we're not very ready on that. But in terms of the technology, the security one, the cyber attacks, I think I need to give kudos to the regulators and the operators in Nigeria. We've done well on that. There's still room for improvement, please. That's not what I'm saying, because we have some players that don't have a clue on what encryption, on what security, on what risk managements are, and they are still operating. But the good thing is that when those investors come, they insist, because they know that in a day, their investment can disappear. So they insist on ensuring that those things are in place. So we are not there yet, Debo. We are close by to there, but we understand what it takes. And I believe with the right mix of people, both in the regulatory aspect and in the operator aspect, we'll get to where we need to get to.
Okay.
Let me just say quickly that I think open banking is an issue everywhere. I'm sure it's not just in Nigeria, even in the US and Canada. The big banks, the traditional banks, do not really want to open up everything. So I think Nigeria is still on the right path. It will take some time, but I think, yeah, probably eventually it's going to happen.
Thank you, Debo, for asking that. I'm also aware that the data protection policy is something that is being pushed. A lot of education has to go into that, like Babati rightly said. I've gone through the policy myself, and sometimes you read it and you're not clear and you're asking questions. There's been mandates for most companies who reserve data for, I think, more than maybe 1,000 or 500. There's a certain number. You're supposed to have what they call a data protection officer, a DPO, who's supposed to be certified, trained. So basically, someone who's responsible to drive your compliance. So those are things that the regulators are pushing now. The extent to which this has been fully implemented or compliance level, last I checked before COVID, compliance level was still generally very low across the industry. But something Babati touched on that I also support will drive it is, I don't expect investors to put in money without doing due diligence. And your data protection is one of the things you have to insist that the firms that you invest into put in place. And I even think for individuals, those are some questions that we should feel comfortable to ask. Well, how protected is my data? Why are you asking me for this? Because those are some of the things the policy touches on. That why, okay, so why do you need this information? How long do you keep it? If I don't want you to keep my data again and I say delete it, I want evidence that it's deleted. So to a large extent, there's still room for public awareness. There's still room for corporate level education and sensitization, as you might want to call it. But yes, we're making good progress in that regard. Now, to jump on something very interesting, because as we talk about the regulators and recent happenings, and this one was also hot from the last global economic outlook we did, was the Bitcoin. And so just because Babati is here, I need to pull him out on it and pull Debo or Philip, whoever wants to jump on this one, because of the recent dip. And this dip has been a funny one because I've seen on some of the fintech platforms, their Twitter handles, and you hear some things they say like, have you protected your rent? Why are you still worried about dip and all of that? I thought it was a good time again just to hear you guys' opinion, because the last time we all as a panelist felt like if you don't understand the economic factors driving any stock, any investment, then you don't do it. You have to understand what's driving it before you get involved. And we also have participants who have had experiences with Bitcoin, and they share their own opinions. And yeah, they insisted on the same thing. It's risky. You need to know what you're doing. But the recent dip, the recent regulation is also something to look at. And I just wanted to get each person's opinion or thoughts on where you think we are today on Bitcoin. Who wants to go first?
Yeah, I can go.
I'll come later because I'll be controversial.
I will just take it back to where we ended the last time, where we, like you said, most of us were like, we don't understand it. There's no fundamentals behind it. So, and it's exactly what happened, where we believed someone was trying to pump the market up, and eventually it came up with a different statement, and within a couple of days, there's a big crash. I mean, it's just exactly what what crypto is about. It's about feeling. It's about what somebody feels and what somebody says. And I can just cannot imagine me feeling like a millionaire one day and the following day, my my total asset is half just because someone tweeted. I mean, it just doesn't make sense to me. And that position, personally, that position has not changed, that I do not believe in crypto. Well, of course, the person that was making people believe that there's a future in it, that, okay, it will be the currency for trading, is backing out now. It's using climate change as excuse to say, okay, we need to back out of it. And I wouldn't be surprised if the guy had sold his Bitcoin before making that announcement, because that is the strategy that someone could do. You pump it up, you sell it, and you say, no, I made a mistake. Now the poor guys are the ones losing because he had made his money and backed out of it. I would not be surprised if that is what he did, because the guy has history or something like that, to be honest.
And just to say, Devo, 25% of Tesla's profit actually came from Bitcoin. And I was saying that if you look at the quality of earnings, you normally should make money from your normal operations. At least anything that comes from your core, outside of your core operations, at least should not add so much. But the sale of Bitcoin for Tesla in the first quarter contributed about 25% to their profits, which for me is suspect, especially when you look at some of the things that have happened before then. First was the approval for it, and then you say, oh, okay, it's now the main thing. Is it saying now that he doesn't know that the climate, it's affected by climate, or that the climate change is going to affect all that? I don't know what his stand is, but much more right now is that I also have a feeling that even the countries are going to probably totally displace Bitcoin. Don't quote me yet, but I feel like because China is coming out with a digital currency now, which they are going to call e-yuan, I understand the US is considering something similar. What I know of these two countries, they are not going to be competing with Bitcoin for in a space if it has to do with the digital currency. They will probably just find a way to get them out. It will rather be a battle between the US and China and probably Russia, and some of these other countries, but that they would be in competition with, these other names, I don't think so. And whenever something is moving by virtue of just feelings, somebody says this today, then it goes up, then it goes up, and then it doesn't make any meaning. And I don't think anybody should still be exposed to it. I know, yes, there are risk takers. I know, yes, there are people who love to gamble. And except you gamble, except you're a gambler, I don't actually think you should be anywhere around crypto. So my stand also hasn't changed like Devo. It's just the same way still.
Okay, so I guess I will not be that very controversial. But first and foremost, I think this is a platform for education. So I think we should start from the basis first. So what is cryptocurrency, or the way they are shouting it? Let's just put it normal lame town view. They just want to have the currency digitally. So today, let's relate it to Naira. You have coins, you carry notes that shows Murtala Mohammed, you carry notes that shows Awolowo. So what cryptocurrency is basically saying is, or what the digital currency, the way I would like to refer to it, is saying is, don't carry those notes and coins again. It will be digitally stored. Bitcoin is just a means of, it's another subset. Somebody driving, so if somebody is driving it, the guy has named it Bitcoin. Another person will come again trying to drive that and name it another name. Let's just make it that simple. I think the fundamental for me is, are you investing in Bitcoin as a currency, or are you investing in it as an asset? And I think Deborah and Philip can help on those one. There's two distinctions between those two. So it's like coming to tell me that I should buy Naira as an asset. How do you buy Naira as an asset now? Where do you get it from? What job is the Naira doing that will bring income? So for those who are buying this currency for purpose of an asset is where the wahala is. And that's where somebody will wake up tomorrow, depending on how he feels, the asset will feel that way. If he feels very well, the asset will jump up. If he feels very bad, the asset will go down. Will there be digital currency? I think the states will promote digital currency. And I think that's what Philip is referring to. So you will have digital currency in the US where the dollars will be denominated. So you'll not be getting the physical notes, but your value will be stored digitally. So if I have $1 million, they don't have to come to my house and see the physical $1 million counted in notes, because there's a lot of savings for them on that aspect. Ability to print those notes, security notes, and all those things will be disappearing because you can have those things digitally. So I see the big powers, I see most of the central banks having digital currency. That's a currency that is being issued, that is being backed by the state. You can hold somebody. Who will you hold if this state Bitcoin fails? Who is backing it? Who issued it? So if you are doing that investment for the purpose of an asset, I wish you all the best. I can only bury you when the time comes. Let me put it that way, if you die of heart attack. What is happening now? So it should not be used as an asset. It's not something you go and invest in and say you are buying Bitcoin at $1 now, then you are hoping to get to $10, then you will sell it. It's not an asset to be traded in, my own opinion. I'm not an economics, but that's the way I recognize it. But will the central banks all fund digital currency? The answer is a yes, where you can store those things digitally. That's where Fintech comes into play again on those ones. But if it's an asset that you are doing kalu on, and you are hoping that you will buy it at $10 today, and tomorrow it will jump to $20, I wish you all the best. I belong to the category of Debo and Philip on that one. Thank you.
And actually, just to add to what you just said, like countries going digital. I think Sweden is a perfect example. A kid born in the last 5 years in Sweden doesn't even know what money looks like. They are completely cashless already. And a lot of countries, I believe, will go in that direction. And what will make it really against Bitcoin and the likes is the fact that, like you have said, those will be backed by the regulatory powers of those countries. There will be legal tenders. As of today, I don't think Bitcoin is a legal tender anywhere. It's just what people are saying all around, that it's making it like a currency. At least a currency should have legal tender from somewhere. Naira is Nigeria's currency. So when we go digital, that becomes our currency. And it will be traded against other currencies. I don't know what Bitcoin is trading against. I don't know who regulates it, or there's no regulator at the moment.
Okay, thank you for that, Stable. So now I want us to move into the final part of our discussion today, which will touch on personal finance. And then I have an interesting question which came from the conversations we had around fintech, especially as Babati talked so much about why this industry is attracting a lot of capital now. And so I have a question, so I'll paraphrase. So basically, as an individual, how can I foresee the opportunity and don't miss out? So, could it be that I position myself as an angel investor? And if that's what I want to do, where do I even go to find the right startup? What should I be looking at to look at opportunity to invest? I know, Philip, you call this more like private equity. So I don't know who's going to say something about that. There are opportunities coming up in fintech, and like you rightly know, a startup, it might create room for private investors to also put some money in there. So how do I identify these opportunities? Where do I even find them? Where do I start from? So we don't miss out. That's the question. So I paraphrased it.
Okay, I'm sure Babati will talk a little bit more on this because he's there already. But I think, of course, it's just what happens on a daily basis. It's just to be able to identify what problem, if there's any problem around you that you think can be solved in a systematic way. Basically, right now through financial technology. So if there's anything in your mind when it comes to maybe risk, maybe when it comes to probably making payments or credits easy for people to access, I think those are the opportunities. Yes, like you rightly mentioned, it's called private equity, private debt. So you have to look for somebody. You can even be the one with the idea. You might not have the technological know-how. You might not have the technical skills to bring it. That's why partnership works a lot more when it comes to these things. You have the idea, you know how this thing should work. You identify the problem, you see that, oh, okay, I think this can be like this. Then you can discuss with the technical person, and then you work together with your idea and with the technical skills of, anyone who is there, then you can work together to get it going. So I think that's what's important, identifying the problems and, then working out from there.
Okay, thank you, Philip. Babati, don't say anything?
Okay, yeah, I agree with him. And most importantly, it's the problem we have in Nigeria, and I will state it without fear of contradiction, is the fact that we want to invest today and we want profits tomorrow. Anything outside investing today and getting profit in a year's time, most people are not interested. Go and look at all the companies that have been successful. Go and look at all the entrepreneurs that have been successful. It's a journey of 5, 10, 15 years. So it's not something you put in today, it's for the long haul. So you have people today who are setting up businesses, and the first thing in their mind is to say, no, I'm not setting this business up to make profit. I'm setting it up to create value and then sell it up to those who can bring in money. And then we have this mentality in Nigeria. We want to own 100%, owner, founder of this. We want to own it 100%. No partnership, as Philip rightly said. Absolutely not. You want to own everything. You don't want any partnership. Then you can't scale up. So first and foremost, the paradigm has to change to, I want to start a business, I have this idea, this is where my strength is. So it has to come from a self-awareness first of what your strengths are. Where do your strength lies? And then who else do you want to partner with across the divide in birthing their ideas that you have? So if you are having a good idea, you are not good in the logistic aspect. So you look for somebody on the logistic aspect that can partner with you and bring investment in whatever you want to do. So the key challenge is first and foremost to change the paradigm. So you have somebody who wants to go into real estate, build and sell, and he's waiting to get 100 million before he starts the build and sell. And in his entire year, he might not save, that idea will die with him. Rather than him looking for another 10, 15 friends or 20 friends and say, can all of you all bring 5 million and start? And then you do the first one, 20 of you, 100 million. Then you scale it down to 10 of you after the first or two profit, into 10 of you, 10 million. And then you scale it down into 5 until you have the capacity to do it alone. The paradigm and the education, in my own opinion, is what needs to fundamentally change first before we begin to look at those things very well.
Thank you very much, Babati. Thank you for that. And so, Devo, over to you for just a brief touch on managing our personal finance. And then
and I think what we just talked about is something I would like to add as well, which leads to personal finance. I'm not sure if the person that asked the question used the words that you used when you brought the question up in terms of fear of missing out. FOMO is a big pitfall when it comes to investment, where you see something trending, everybody is doing this, and the fear of missing out, you jump into it. That is a very easy way for you to lose your money. And I think that's one of the ways people have jumped in all these pyramid schemes where, they say, somebody's making quick returns, 100% return in 2 weeks. Oh, am I going to miss out? Then they jump on it. So even with fintech, yes, it is bubbling. There's a lot of investment going into it, but the reason to go into it should not be the fear of missing out. It should be the fact that you have studied the industry, you speak with people that are in it already, you understand what you're getting into, and then it will be a way to get into it. That's my thought on that.
Okay, thank you very much. Thank you very much, Devo. So that brings us to the end of today's discussion. I'm going to check if we have more questions, then I will take it. But it looks like we're fine. So just final words from the panelists, then we call it a beautiful day. Philip, can you go first? Just final words to share, then we'll call it a day.
Of course, it's been an interesting time once again. I guess we've all learned a lot, especially about the African continental free trade area. And of course, we build again at the Bitcoin. This position, of course, of some of us still remains the same. And of course, events have not proved us wrong, which means that, of course, everything should be backed by some fundamental reasoning. And if it is not, then it calls into question the main thing itself. It can't be moving by virtue of feelings. Nothing moves by that, especially not investments, not anything that has to do with making profits. Should actually be by virtue of feelings, or and something that you have to look at recently again is AMC. You remember AMC and GameStop? They had that they were pumped down by Reddit investors earlier in the year, and recently in the past week, AMC also has been experiencing that surge again. So it's been up and down, and again, you have to look at it. What's the reasoning behind it? Is there anything driving it? Is there any reason why I should go into it? So I think it's just the questions, the necessary questions that are important, not just for stocks, for any kind of investment. Just like Debo said, it's not just about following the money. Following the money can lead you into trouble too. Just look at it and see that it is actually what can you bring about some viable returns in future. So that's it from me.
Thank you, Philip. Debo, final words from you as we call it today.
Absolutely. Yeah, I've learned a lot about the fintech in Nigeria, thanks to Babati I mean, it's a great experience to learn about that. Thank you. Also, my final words on the Africa Free Trade Agreement. I think what we also benefit Africa largely would be value addition. A lot of things that we produce in Africa and we send out are in their raw form. And in their raw form, the prices are lower. So we send them out and then we buy them at a higher price when they are processed. So if Africa as a whole can look into value addition, tapping into the value chain or along the process of everything we manufacture, I think that will really bring value to the continent as a whole as well. Thank you.
Thank you, Debo. Baba T, final words from you.
Thank you very much. First and foremost, I want to thank the organizers for inviting me. I'm highly honored. Secondly, I want to say that I enjoyed my time, and I hope everybody on the platform to enjoy their time. I just want to say that the market is huge. The opportunities are many for both the investors and for those who are creating value. You just need to be sure of where you want to play in. And for those who want to play in as entrepreneurs or as investors, please look at long term. Look at long term, don't look at short term. At the long term is where the value actually is. So if you invest $1 today and after 4 or 5 years, you're getting $25, it's a long term way. So don't begin to look at immediate gains as what you want to look at. And for me, again, what I would like to say to the young people is know your friends. The ones you went to school together, the ones, you guys put resources together. You can begin to do things together. I engaged an 18-year-old, and the way he engaged me on what he was thinking about how the e-payment should be, with a little bit of guidance here and there, he will do exploit because the ideas are there. So it's important, again, that people have ideas and they know who to run to be able to nourish and work on those ideas to become realities. When you dream and those dreams don't come true, it's only when it comes true that they translate into money. Well, ask the Microsoft of this world and all the people of this world that are making it with the Jeff Balls, and that dream has to come true. If it doesn't come true, it doesn't become money. So it's always better when it comes true. And please, don't be afraid to share it when it comes true, because it might be too much for you alone. And the earlier you share it, the better it comes true, actually. That's the honest truth. The earlier you share it, the better it becomes true. That's what I have to say for everybody. And thank you, everybody, for listening.
So thank you so much for that. Thank you, everyone, for joining us at this second live event. I've personally had a good time with the panelists. Baba T, brilliant man, and it's so good that you honored this invitation and you joined the discussion today. Philip, as usual, you have our support. We have your backing, and I think you're doing well. Thank you so much, Debo, for also joining. Thank you for everyone with us on Zoom. For those who are watching on YouTube, thank you so much. If you still have questions or thoughts that you want us to, touch points on, please feel free to respond to the email invite you got. The details are provided. Philip, you could just please drop the general email address in the chat room too, so our viewers can also reach out to us if they have any questions. Please remember, like we always say, most of the thoughts shared on this discussion, they're personal opinions, that are perspective based on our own experiences of the local market or how we view the global economy. At the end of the day, each person has to do their personal research. You have to ask those difficult questions and look for the answers for them to make your own decision. Latching on to what Baba T said, it's a long game. If you play it short, then the benefits might really be near zero. But if you take a long-term position and you do your research properly, and you're paying attention to your personal finance, you're paying attention to your social habits, to the way you look at things, and you're asking for guidance, you should definitely make better money decisions or better investment decisions. So I'll say we've had a fantastic 90 minutes and we kept to time, and that is so commendable. Thank you so much, everyone. And we'll see you at the next discussion. Take care. and have a wonderful day. Bye, guys. Bye, Babati.
Bye-bye. Bye-bye.
Bye.
Bye-bye. Philip, bye.
Bye.
Bye.